Hey everyone, welcome back to Corporate Decoder, the place where we decode the corporate world. Today we're diving into a report from 16/6 to Corp, and let me tell you, it's a bit like a roller coaster. You think it's over, but then takes another unexpected turn. Before we start, if you appreciate getting straight insights from corporate documents, make sure you're subscribed. We also have a Discord community linked in the description below for you to share your thoughts. Fund 6006 Corp just made some changes to a previous agreement that could give them more time to get money, but also might change how much stock someone else can buy. It's like extending the deadline on a loan, but the terms might be different now. Let's see exactly what they are doing. First, let's talk about this thing called a material definitive agreement. It basically means the company made a really important deal, important enough that they have to tell the government about it. It involves a previous agreement called an equity financing agreement. Think of it like this: the company made a deal to get cash. Back in February of 2023, 1606 Corp made a deal with GHS Investments. GHS agreed to give them up to $20 million over 2 years after a certain paper got approved. This paper is something they filed with the Securities and Exchange Commission, the SEC, kind of like the government's business police. Once that paper is approved, 1606 Corp can ask GHS to buy their stock, which is like selling a piece of the company. The amount GHS has to pay depends on the price of the stock at that time. The price GHS pays is usually 80% of the market price, which is what the stock is trading for. But if 1606 Corp gets listed on a bigger stock exchange, like the Nasdaq, the price goes up to 90% of the market price. But at least $20 per share. Basically, if the company gets bigger, GHS gets a little less discount. To make the deal even sweeter, 1/1660 if the company gets bigger, GHS gets 400,000 shares of stock just for signing the agreement. There was also a registration rights agreement. This means 1606 Corp has to register all the shares that GHS could potentially buy so GHS can sell them later. The company has to try really hard to get this registration done quickly. The amendment changes when the agreement ends. Originally, it was supposed to end after 24 months from the start date. Now it ends when either 1606 Corp has sold $20 million worth of stock to GHS, or 24 months from when they made this change on May 14, 2025. Basically, this gives the 1606 Corp more time to get the full $20 million if they haven't already. The company also changed the registration rights agreement to match the new changes. If you want to read all the fine print, you can check out the actual agreements, which are called Exhibit Stol. Alright, that's our breakdown of 1606 Corp's latest filing. Now let's zoom out and look at what all this means for 1606 Corp. On the one hand, getting more time to access that $20 million could be a lifesaver. It gives them more flexibility to fund their projects or expand their business. However, there are a few things to keep in mind. First, selling more stock means each existing share is worth less. It's like slicing a pie into more pieces, each piece gets smaller. Also, relying heavily on this kind of financing can be a sign that the company is struggling to generate cash on its own. Overall, this amendment looks like a double-edged sword. It gives 1606 Corp some breathing room, but it also comes with potential risks for investors. Whether it's a good move in the long run will depend on how wisely the company uses the extra time and money. What's your take on these changes and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.